Ever wondered why understanding a company's financial strength is crucial? It's like peeking under the hood of a car. It gives us insights to make informed investment decisions, forecast future growth, and assess risk. Financial strength can be a beacon in the fog of financial markets, guiding us towards safe harbors or warning us of rocky shores. It's the compass that navigates the complex world of finance. So, let's dive into the financial indicators that can help us gauge a company's financial health. To decode a company's financial strength, we need to comprehend some key financial indicators. Let's start with total operating income. This is the revenue a company generates from its primary business activities. It's like the total amount a store earns from selling its products, excluding any side income like interest from a savings account. Next, we have gross profit. It is the profit a company makes after deducting the costs associated with making and selling its products. Think of it as what's left after a restaurant pays for ingredients and labor. Now let's move on to total operating expenditure. This is the total cost incurred in the day-to-day running of a business. It's like the monthly expenses of a household, covering everything from salaries to electricity bills. Then we have profit before tax, PBT, before and after exceptional items. Exceptional items are significant, but non-recurring events. They could be profits from selling an office building or losses from a lawsuit. So, PBT before exceptional items gives us the regular profit, while PBT after exceptional items shows the impact of these one-off events. Finally, profit after tax, PAT, is the net profit that a company has after subtracting all its expenses, including taxes. It's the bottom line, the final tally of whether a company is making money or not. Now that we've understood these financial indicators, we're equipped to analyze a company's financial strength. Having delved into the technicalities, it's time to connect the dots. We've explored the importance of understanding a company's financial strength. It's the backbone of its future growth and stability. We've also unpacked key financial indicators, each one shedding a unique light on a company's financial health. First, the total operating income, showing us the total revenues from the company's core business operations. Then, the gross profit, revealing what's left after subtracting the cost of goods sold. The total operating expenditure, on the other hand, informs us about the costs associated with running the business. Next, we have the profit before tax or PBT, both before and after exceptional items. These give us a clear picture of the company's profitability with and without extraordinary events. Lastly, the profit after tax or PAT, indicating the final profit the company makes after all deductions. Remember, these indicators are tools in your analytical toolbox, helping you make informed and strategic decisions. So keep them handy.